You're sitting in your chair, staring at the screen. You just lost a trade. It wasn't a huge loss, just a standard stop out. But something inside you just snapped. There's a heat rising in your chest. Your heart is thumping against your ribs. Your breathing is shallow. And suddenly the strategy you've spent months perfecting doesn't matter anymore. The risk management rules you wrote on a sticky note, they might as well be invisible. In this moment, you aren't a trader. You're a person who has been wronged, and you want your money back. Right now. If you've ever felt that click, that sudden shift where logic exits the room and a desperate version of you takes the wheel, then you have experienced the most destructive force in the financial markets. Revenge trading. It is the pattern that never ends, the cycle that turns promising traders into statistics. Today, we aren't looking at charts. We aren't looking at indicators, we are looking at the mirror. We're going to dissect why you do this, how it's hardwired into your biology, and how you can finally break the chain before it breaks you. If this hits a nerve, hit the like button. Not because I'm asking, but because it's a signal to yourself that you're done being a victim of your own emotions. Revenge trading doesn't come from nowhere. It starts with a spark. Imagine you've been patient all morning. You waited for the New York Open. You waited for the liquidity sweep. You waited for the displacement. Everything checked out. You entered the trade, and the market immediately did the most disrespectful thing possible. It wicked your stop loss by half a pip, and then flew 100 pips in your direction. That's the spark. It's not the financial loss that hurts. It's the feeling of being disrespected. You feel like the market is personal. You feel like it saw your stop and went for it. In that moment, you don't feel wrong, you feel wronged. There is a massive psychological gap between those two states. When you are wrong, you can learn. When you feel wronged, you want justice. And in the markets, justice is spelled with a buy or sell button and a doubled lot size. Take the story of a trader named Chris. Chris was disciplined. He had a 2% risk rule. One day, on US 30, he got stopped out by a freak newswick. He was furious. He didn't wait for a re-entry. He didn't wait for confirmation. He opened a position with a 10 lot size thinking, I'll just get back to break even and then I'm done. He lost. Then he tripled the size. He lost again. Within 15 minutes, Chris had destroyed 3 months of profit. When he finally closed his terminal, he said something every one of us has said. I don't even know what I was thinking. I just kept clicking. That's because Chris wasn't thinking. He was in a state of amygdala hijack. His logical brain, the prefrontal cortex, had been completely shut down by his emotional brain. He was in fight or flight mode. But you can't fight the market and you can't run away from it while your money is still on the line. This cycle often stems from regret. Maybe you missed the move of the day because you were making coffee or answering a text. You see the massive candle and you feel that pang of, I should have been in that. That regret turns into an impulsive need to catch the tail end of the move. You enter late with no setup and the market reverses on you. Now you're not just missing out, you're losing. The frustration doubles and the revenge cycle begins. It's a downward spiral where each trade is an attempt to fix the emotional pain of the previous one. But trading to fix a feeling is like trying to put out a fire with gasoline. Another hidden trigger is winning incorrectly. Have you ever closed a winning trade too early? You saw a bit of red, panicked, and took a $50 profit on a trade that eventually went for $500. You feel like you robbed yourself. To make up for the missing $450, you jump back into a random setup with a massive lot size. You aren't trading the market anymore, you're trading your own shadow. This is why professional traders focus on process, not PNL. They know that once you start trading to recover something, you've already lost. Let's talk about the comparison trap. You're in a Discord or on Twitter, seeing people post $10,000 days. You look at your $20 win and feel small. You feel like you need to catch up. This insecurity is the fuel for revenge trading. You increase your risk because you're comparing your Chapter 1 to someone else's Chapter 20. When that increased risk leads to a loss, your ego is shattered. You trade again to prove you're a real trader. But a real trader is someone who can walk away. The silent killer is the winning streak. After 5 wins in a row, you feel invincible. You think you've solved the market. Then the first loss hits. It feels like an insult. You think, that's impossible, I'm on a roll. You take another trade to prove the loss was a fluke. Then another. This is winning streak revenge. And it's how entire accounts get wiped in a single afternoon after weeks of perfect growth. So, how do we stop the pattern? It starts with the cool down rule. If you take a loss, you must walk away from the screen for at least 15 minutes. No exceptions. 5 minutes isn't enough because your nervous system is still spiked. You need time for the cortisol to drop and the logic to return. You need to develop a written exit rule. Before you click enter, you must know exactly what you will do if you lose. Not just where your stop is, but what your physical action will be after the stop is hit. If I get stopped out, I will close the laptop and go for a walk. Write it down. If it isn't written, it isn't a rule. It's just a suggestion. You also need to journal your triggers. Do you revenge trade after a tight stop out? After a missed move? After seeing someone else's profits? Once you name your demon, it loses its power over you. You can't stop the emotion from rising, but you can stop the emotion from reaching your fingers. Remember the story of Luis. He had 1 hour to trade before work. One loss made him feel like his whole day was wasted. He tried to fix the morning in 45 minutes and ended up losing a week's worth of salary. He told me, revenge trading isn't about the money. It's about trying to run away from the feeling of being a failure. But you aren't a failure because you lost a trade. You're only a failure if you let that loss dictate your next move. The market is not a place to seek emotional validation. It is a cold, indifferent machine that processes probabilities. It doesn't know you exist, and it certainly doesn't owe you anything. To succeed, you must build an identity that is stronger than your impulses. You must become the trader who can watch a perfect setup fly without you and say, good for the market, and go back to your day. You must become the trader who takes a loss, says thank you for the data, and closes the terminal. Trading isn't about being right, it's about being disciplined when you're wrong. If you can control your reaction to a loss, you have already won the most important battle in trading. Control your mind, and you will eventually control the charts. This is the path to consistency. It's not a new indicator or a secret SMC entry. It's the ability to stop the pattern that never ends. If you're ready to commit to the process over the profit, leave a comment below saying, I am in control. It's time to stop the revenge and start the career.